Okay, first, excuse my background. I am in the middle of moving offices in Birmingham, so thanks for putting up with that. Let's just jump into it here. Of course, you've already watched the first video with Bill and Scott and I walking the site in Amarillo. Now let's just go over the best ways to invest in that opportunity. So first, let's talk about the tax benefits, and then we'll talk about how some of our other investors are currently investing their capital through this new conduit, or not new, but just a different conduit called infinite banking. So obviously, this number can be a lot larger. It can be down to, I think, $65,000, but I'm going to use a very round number of 100 grand. In the very first year, you get a 100% intangible drilling cost write-off, which is kind of the equivalent to bonus depreciation in commercial real estate. So you put $100,000 in, the government allows for a $100,000 tax deduction against your earned income. Now, the best part is there's no qualifications or certificates that you have to have. You don't have to be a real estate professional to take bonus depreciation against your earned income like you can do in this oil idea. So it's a lot more lucrative regarding you don't have to be professional at anything. So if you have a gross income of $500,000, it knocks your gross income down to $400,000 immediately. Now that's depending upon what your federal and state income tax liability is. Let's say it's 40%. So before this investment, you would have owed Uncle Sam $200,000, but after you deploy capital into this, you will owe Uncle Sam $160,000. So you still owe the government money, but you immediately save $40,000. So essentially, that's like a 40% return on investment before even any oil comes out of the ground. So let's just look at the first option as to how, before I got invested or at least started in this, how I would have done it. You put $100,000 into the deal. That's how much that you had $100,000 in your own account, and you take $100,000 out and you deploy it and you wire it to this fund. Let's say that the return on investment is 30%. It could be higher, it could be lower, just depending upon how many pump jacks we get into service. That's $30,000 of cash flow. The first 15% of that cash flow is tax-free, which is a nice benefit. So that means $4,500 of tax-free income. Your long-term capital gains on this facility is 15%, leaving you with taxable income of $25,500. Capital gains of $3,800 and some change, leaving you a net cash flow of $21,675. Now, that's a net operating income or net return on investment of 21.7%. Not bad. I like to go a step further and couple my cash-on-cash return of the investment with also my tax deduction or my tax refund of $40,000. So what this will do, this global return on investment is closer to 61%, and that just has to do with, again, the taxes and also the return of the investment. Now, let's switch gears and look at the right-hand column here. This is what we call the infinite banking concept. And what you can do essentially is funnel money through a different conduit than just a savings account or a CD at the bank. You can actually funnel it through whole life insurance, and you can structure it and design it for cash value. And what that means essentially is that you can let your money stay inside of your policy and compound and never pay taxes and never be exposed to litigation. It's completely attorney and tax-free. And the insurance company will give you a line of credit that's unstructured. So there's no payback, there's no amortization. You control the everything about the line of credit. So let's look at the returns. If you're like me, you focus on cash on cash. How can I extract the most juice out of the deal? And that all has to do with the financing aspect of it. The deal is the deal. How do we extract more juice and increase our cash on cash? We have to have less of our own money in the deal. So like you see right here, return on investment is our net operating income divided by our injected equity, how much capital we have to deploy into that deal. So in this case, the returns are the same, the cash flow is the same, all this stuff is the same. The difference is that instead of me putting $100,000 of my own money in, instead I borrow the insurance company's money. In exchange for that, I allow my money to keep compounding and growing, and then they charge me 4% interest on their money. Now you might be asking, doesn't it make more sense to actually just use my own capital? Well, let's look. If they charge you $4,000 as the cost of capital to invest in this project, let's take our net cash flow of $21,000 and divide it by our cost of capital, or $4,000. That essentially increases our return on investment to 541%. And that doesn't even talk about what the policy does in the background. Because remember, it's still growing at 4.5% tax-free. and we're using the insurance company's money. So where it gets really cool, of course, is not only just the return of the investment, but then when you tack on the tax savings immediately because of the bonus depreciation, your global return on investment gets almost to a comical number of over 1,500% annualized. So again, you can do it how you want. This is how our investors are doing this. They come in and they invest in these sponsored deals like this that are re-enter oil deals. And again, North Texas, West Texas, even sometimes East Texas. And the return on investment are cool, but how you do it is what gives this idea superpowers. So again, if you need more information on the oil investing, rewatch the first video. If you want to learn about using this infinite banking idea to invest in oil, potentially real estate, purchase other debts in your own life, we can discuss that as we move forward and go down the line together to see if this is the right fit for what you're trying to accomplish. So I can't wait to see you on the other side. I'll see you on our next call here in the next couple of days. Talk to you then.